Welcome to Blueprint Viral News, your go-to spot for US market updates. Today, we're unpacking the hottest sectors driving the Dow Jones, NASDAQ, and S&P 500, sorted by market cap. Materials, technology, and information technology are making waves, and I'm breaking it all down. What these sectors mean, who's in them, and why they're surging. If you're ready to stay ahead of the market, smash that like button and let's dive in. First up, the Dow Jones Industrial Average, the king of blue chip stocks. Let's see who's leading the charge. Taking the top spot is materials, skyrocketing 3.43%. So what's the materials sector? Picture companies digging up metals like copper or gold, brewing chemicals for plastics, or crafting cement for skyscrapers. Big names like Dow Inc. make industrial chemicals. Sherwin-Williams whips up paints, and Nucor forges steel. That 3.43% spike tells us factories and construction sites are buzzing. Maybe a sign of economic growth. Next, consumer discretionary is shining at 2.87%. Think shoppers splurging at Amazon or Nike. Industrials climb 2.47%, with giants like Caterpillar building heavy machinery. Now let's talk tech. Information technology gains 2.38%, and technology is close at 2.31%. These are likely the same sector. Let me explain. The technology sector, often called information technology, is the brain of innovation. It's Apple designing sleek iPhones, Microsoft powering your laptop with Windows, and Intel crafting chips for everything from cars to AI. That 2.3% rise shows investors still love tech's long-term potential. Hold tight. Things get wild with the NASDAQ, the tech-heavy titan. Let's check it out. Energy dominates with a jaw-dropping 5.79% surge. This sector's all about oil rigs, gas pipelines, and even solar panels. Think ExxonMobil or NextEra Energy. That kind of leap could mean rising fuel prices or global demand spiking. But let's zoom into technology, up a solid 2.91%. This is the heart of NASDAQ. Companies like NVIDIA building AI chips for self-driving cars, Adobe creating Photoshop, and Amazon running its massive cloud network. From virtual reality to cybersecurity, these firms are shaping the future, and that 2.91% proves they're unstoppable. Industrials gain 2.64%, consumer discretionary rises 2.62%, and financials rounded out at 2.41%, with banks like JP Morgan in play. All right, let's wrap up with the S&P 500, the pulse of the entire US market. Who's on top? Energy leads again at 3.45%, riding that oil and gas wave, but hot on its heels is materials, up an awesome 3.41%. To paint the picture, materials is about raw stuff. Freeport-McMoRan mines copper for electric cars. DuPont invents chemicals for everything from phones to planes. And Martin Marietta supplies gravel for roads. That 3.41% jump screams demand for building and manufacturing. Is a construction boom coming? Then we've got technology at 2.73% and information technology at 2.39%. Same sector, different labels. This is where Google runs your searches. Cisco keeps the internet humming, and Salesforce helps businesses grow with software. From cloud storage to AI assistants, these companies are everywhere, and their 2.7% gain shows they're still investor favorites. Finally, consumer discretionary adds 2.31%, with folks buying cars and clothes at Tesla or Target. So, what's the story here? Materials is killing it in Dow and S&P 500. Those 3.4% gains could signal rising metal prices or big infrastructure projects. Technology, aka information technology, is rock steady across all three indices, with stars like Apple and NVIDIA proving innovation pays off. And let's not forget energy's wild 5.79% run in NASDAQ. Something's up with oil, with markets bumpy, S&P 500's down 8% in 2025. Are you jumping into materials for growth, banking on tech's reliability, or eyeing energy surge? Share your strategy in the comments.